Alrighty. Hey everybody. Good morning. And cool. My chat didn't load. That's awesome. And that's not helpful. Let's see. Oh, cool. And my phone's making noise. Awesome. Love it, love it. Let's see. How do you get back the chat? There it is. There it is. That should be working. All right. Monday. Monday on a Monday. Welcome everybody. Let's see, we got channel members Rob, Ivan, Dan, Brian, Rex, Don, Frank, Sergio, Svenborn, Laura. Good morning. Got something on my glasses that's sparkling in these bright lights. Arturo, Ed, Ted, Darren. Good morning, everybody. Let's see if that works better. Better. All right, and my phone's still making noise, so even though everything's hooked up. Cool. Love it. Mute everything. All right. Whew. Holiday spending numbers are out. Or not numbers, but projections, I guess you would say. That would be the more accurate thing to say about it. And where do you get these things? From trading desks. How do I find them? I subscribe to a premium aggregator that aggregates stuff like this, reports from different trading desks. What kind of trading desks? We're talking about like JP Morgan's trading desk. We're talking about like Morgan Stanley's trading desk, Goldman Sachs, those people like that. And Bank of America is one of my favorites. And they put out some reports. So this right here is, we have people under 50,000. We have 50,000 to 100,000. This is your like household income. And we have 100,000 over here. And this is a survey who's spending less money on winter holidays, gift giving. Same in the blue, the dark blue, and then gray is more money. And you kind of see 40% here. This is not, I mean, that lower income still struggling. And this is interesting too. Look at that big spike in the spending less in the mid tier right there. And supposedly you bring in about a household income of around 80,000 and you live comfortably. And those people feeling a little bit of stress here. To me, that was the bigger indication right there. And then people spending more, we're seeing that low income, a little bit spending more, mid spending less. You know, the more people are less, and over here the higher income, over 100,000, high income, less of the mores, and more of the spending lesses. I think that's interesting. People feeling the stress, I guess you might say, of higher prices. You have food prices up 30% in the last few years. And not really, we did slow down the rise, but the rise has not reversed and it's still going up. Yeah, it's kind of funny. They're like, oh, it's slowed down, but think about it. If you're at $10 and something goes up, 5%, it's like 50 cents. But if things have climbed to $100 and things go up 5%, that's $5. I mean, now that the prices have gone up that 30% and we slowed it down, but we're still going up 2.5% a year or whatever, that's still a bigger number than what it used to be. So, dun, dun, dun. And this is just spending more or less, not spending. So, planning on spending more or less on holiday purchases relative to last year. So we're seeing less, and a little bit more in the low end. So interesting right there. Buying on sales, buying on budget, just spending less. So, but that tends to have a direct correlation to the numbers we see reported for the quarter in January. And that's why I'm bringing this all together. Like, if you haven't made the leap between holiday spending projections to how that relates, we're talking about what gets reported on earnings coming up in 2025. And 2025 is less than a month away. Holy guacamole. I mean, today is the December 2nd. So we've got, what, 29 days left after today? 29 days left. I mean, hope you're ready. We've got, 23 days left till Christmas. That's like 3 weeks and a couple days. Holy dang. Where's the time fly? And I don't even. Hanukkah's right in there somewhere. I think it's coming up pretty soon. So where does that leave us? Well, it leaves us with 3 good weeks right here left to trade. First week of December, second week of December, third week of December, and then this week has a holiday right in the middle, and this week has a holiday right in the middle. Market closed those days. Be open the rest of the time. I'm taking this day and this day off, 25th and the 1st. I will not have a live stream, but I'll be back with you all the other days, I'm pretty sure. So, all right. And coming up this week, not a lot of, we get some ISM after the market opens here today. We've got some JOLTS jobs tomorrow after the market opens. We've got some non-farm employment change coming up on Wednesday. Thursday, unemployment claims as always. And Friday, we get the unemployment rate, that monthly jobs report, as they call it, right there. And then we get some consumer sentiment and inflation. We get that almost every week. So that's relatively benign week on the economic news front. Next week, relatively benign again. The following week is FOMC, right before Christmas and New Year's. It's interesting, they'll have another rate change announcement right here on Wednesday, the 18th. So if you're not been tuning in, we get some retail sales right in front of FOMC right here. Boom. Right there. 2 p.m. and Jerome Powell can't resist speaking. There you go. That'll be the last one this year. Of course, there's not much time left this year. And then we have another one right after, I think it's right after the inauguration. So ought to be interesting. That's what I say about that. Ought to be interesting. What do I expect? I expect absolute chaos in the market. And I think there's a lot of complacency happening in the markets. So all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instruments. So that means no stocks, no options, no bonds, no forex, no futures, no cryptos, no treasuries. Don't long them, don't short them, don't trade them, don't buy them, don't sell them. Just don't do it. There's a substantial risk of loss. And just because I make predictions and a lot of times I get lucky, doesn't mean I'll ever get lucky again. So by watching this, you got to be careful, all right? Things I say may or may not happen, and you got to own your own decisions. If you need somebody to tell you what to do, that's called personal financial advice. You just want me to tell you what buttons to hit. You want me to tell you what symbol to type in. Can't do it. It's not what I'm doing. Not what I'm here for. And lots of people are like, why don't you get it? Like, the rules of the game change when I do that. And I can't do what I'm doing right here if I was a financial advisor. But if you need that kind of help, you need to hire and consult a financial advisor, and they can tell you what investments you should get in based on your financial situation, which is, usually I'm just out here giving blanket advice. If it matches with what you're doing, cool. If it doesn't, cool. But you got to make that decision. And if you're not spoofed enough to make that decision, well, educate yourself. All right. Start paper trading. Stay out of real money. All trading involves a substantial risk of loss. Alrighty. Well, last week didn't disappoint. I don't know about y'all. certainly didn't disappoint me. It right in line with pretty much what I always expect out of Thanksgiving week. Big chop fest. Spiked it right in. Look at this. Look at this craziness. Look at that spike, and then whoop, right back down. Right there. Sunday, we spiked it. This was Friday into the early close. Sunday, we opened right there. Continue the dip. And now we're coming back, possibly. Right there. This is ES, S&P 500 Futures. If you haven't seen this before, welcome to the show. This is, why do I use the futures? Because they give me this overnight action right here. Right there. I can take a look, see at it. See if we pop over to the cash index. We stopped on Friday and we haven't started it yet. Like, there's no overnight action. Maybe like, well, why don't you just use SPY? SPY is an ETF. That's a derivative. I'd rather just go to the futures right here. And SPY is actually based off of the futures. So why not just go to the underlying? A lot of the futures are basically, giving you the most clairvoyant view of what's happening right now. Now, there is a slight discrepancy between the prices of ES and the prices of SPX, and because futures are contracts that expire, they have kind of a intrinsic value, if you will, a future-looking value that decays as we get closer to that expiration. So they do gap apart, and we're getting ready to come into the December expiration for the ES futures contracts. That's ESZ 2024 right here. This is the December contract. We will soon move to the March contract. Should be ESH 2025. Yeah, we'll move to this contract here probably next week. I think it is. I think that's the contract rollover. So we'll move to that. And you can see the price discrepancy here. 61.19 versus 60.50 and 60.32. If you didn't know this is how that works, that's how it works. And this right here is a special instrument called a constant contract that just keeps pulling the most current contract. And we do get some of these gaps when we switch contracts sometimes. And then the futures don't like to leave gaps, even more than, you probably heard that if you've been around the stock market for very long. The market doesn't love to leave gaps. Well, futures even more don't like to leave gaps. And the contract rollover for ES was back here actually, and back in September. Would have been right in there. So we do tend to fill the gaps even faster in futures. We don't tend to leave them. There was one left open back there. I'm back in last year anyway. And September, yeah, we gapped up right there. We don't tend to leave these open. Like, eventually that will probably come back and fill. Futures just don't like to leave gaps. Alrighty. So we're sitting here at resistance for S&P 500. You're new here. The last big pullback we did was back in August. What's the orange line? It's a line I call the roadmap line, and we tend to bounce off of it on pretty much all equities in all time frames. Either we bounce off of it, either above it or below it. It tends to be support and resistance. And if you need more information about that, link is in the description. It's like $5, or you can just click on my channel homepage, my little, channel logo underneath me over here, right down there. And the video that's pinned to the channel that plays when you load the channel homepage is the market roadmap. It kind of explains it and gives you the code for the indicator. It gives it all to you for free. So you don't have to buy anything. jack squat. I do that for you. It's that important to me. This line right here. So there you go. So we're sitting up here, and the next resistance is at 6108 on futures, and we're just hovering just below it. That's just looking at the daily pattern. We were on the 15-minute a few minutes ago, right here. Looking at the smaller breakout resistance, smaller targets inside the bigger targets. And we'll see where we go. I'll give you the bias for the day coming up at the end. Let's run through some of the other markets. NQ was firing off alerts while I was in the shower this morning. Looking pretty strong. Like that beautiful 3-wave correction right there. This right here, beautiful 1, 2, 3. Held support. Now we're taking off. I would expect this to get that continuation. We've been looking for that 21.4, 21.5 area right up here. Came up shy back in November. Then just consolidated and consolidated and consolidated. And I am expecting it to pop on up in there. Finally pop up in there. Would be my, I guess you might say, primary expectation here. To pop up and finally hit that extension target right up there. So it broke out and then promptly retraced, working on that final move. There would be some resistance right where we are. Imagine that. We're right in that resistance. We're having a little trouble getting through that 618 zone. Once we clear this high from back here on the 25th, should be free sailing up to that 21.4, 21.5 area right there on NQ. NQ is the NASDAQ 100 futures. Instead of using NDX, I just use the NQ futures. Russell over here, Russell 2000, just grinding the high. That made a very swift recovery and just parked right up here. Not really doing much of anything. And doesn't look like it's going to extend much and doesn't look like it's going to pull back much at this moment. Not really indicating much of anything on the lower time frame. Just kind of churning. A lot of sideways churn. And we did hit the upside target, so I'm not sure what to expect out of Russell, except maybe another correction back down to the daily roadmap line. That would take us back down. Calculating. Yeah, back down to about 2100, 2200. Right in here. Now, if this very not proportional head and shoulders pattern played out, we could see Russell all the way up to 2500. Right there. That was the election. I'll take that off now. So there we go. I do eventually expect this to break down into a much deeper correction, but we may finish this little bit right here before we do that down here. Oil continues to churn the zone. Boy, look at that close on Friday. Right at the line. So there's a giant head and shoulders there, but it's more like a shoulder, head, shoulder, shoulder, shoulder. So we got that one and that one and that one. It's the hunchback of oil, I guess you might say. Shoulder, shoulder, shoulder. Not really a pattern. So, hey, I've left it on here, but that doesn't look like it's the pattern. My primary expectation is just to churn this little squeezy zone, I would call it. We took a little diversion out, and now we're sitting here just consolidating, and I kind of expect it to continue that way through the new year. If we can break out, we've got resistance above us. If we can break down, support way down here, and then on down here. So we've got lots of resistance to go on higher, lots of support above us, and look at that thing. That hit the target on the 30-minute. See if we can get the daily chart target up there. Spicy target at 92. That's what I'm looking for. I am long TQQQ. Thought about closing it all here, but I just wait. And let's go. Let's go. Gold over here. So we were talking about this last week. We came up, we came down, hit a 618, came up, hit a 618, came down, and hit another 618, or I guess a 50 actually. Then we popped up one final move, and we came down and hit a 50 again, holding basically a double bottom at this point right there. The coin flip. That's the bottom line right here. This is a coin flip. We've hit resistance, we've hit support, we've hit resistance, we've hit support. It's just a nested pattern. Now, the bias right now, as long as we're sitting here with higher lows, this low, this higher low, this now higher low, the bias for me would be to break out and cruise up to some upside targets. That could be up here as high as 2,900 right now. But the failure to break higher creates lower highs. All the way back to off the screen. Cool, thank you. Let them jump up a time frame to get it all on the screen at the same time. This is a series of lower highs from here to here to here. That gives me a big red caution flag that we may see a bigger move down. So while in the short term here we are climbing, the longer term we're declining. This creates a big question mark. Can we break up? Or are we going to do this? This right here will probably take us down to the daily roadmap line. If you're really long gold right now, make a decision where you're going to be wrong. Should have done that before you got in the trade, but we very easily could come back to 2,500. We missed it right there. We had the opportunity to hit. We came up shy. May do it right here. So watch out for that. And that might not, like, we could go even deeper on this. So how deep would even deeper be? Let's talk about it in a second. Use the 3-point fib tool. This high, this low, this high right here. Even deeper could be 2,400. Square, look at you breaking out. Really nice. Push through the target. 99 next upside on square. So I know that's a lot of fib lines, so let's clear it up. Just make it nice and clean here for a second. Talking about this high, this low, this high right here, that creates a target right in here. This would be an echo of that. Go Control C, Control V, make an exact copy, project it right down off of there, and that's how we get that right there. It's an echo corrective echo. Now, the reason I'm very, very cautious on this is the fact that we held this resistance zone. Starting to see all the fib lines come back. Right there, we held that zone. If we can get above it, we can go cruising up here. But as long as we're respecting it, this is a very real possibility on gold. And you want the GLD price or whatever, just divide by 10, make your little adjustment. No big deal. You should always look at the underlying, the futures. Gives you the most complete picture of price action, at least for me. Bitcoin just churning, teasing that high. We made an actual higher high on futures on Friday. In case you missed it, right there. We made that high. 100,315, which was higher than this one back over here. That was 100,170. But it just couldn't do it on Coinbase. Coinbase, we came up shy, couldn't get the 100,000. Binance, couldn't do it there either. These are independent exchanges. There's no, for if you're not a crypto trader, you haven't really dove into it. There's no centralized price for Bitcoin. When they say Bitcoin hit 100,000, on what exchange, right? On crypto.com, it actually went well above 100,000. On the futures, it went above 100,000. But on Binance and Coinbase, the two bigger exchanges for Bitcoin, it did not hit 100,000. It's interesting. Every crypto broker is an island. There's no centralized price reconciliation between brokers. So you go buy Bitcoin here, it is likely always a different price than it is over here. And that's true of all cryptos. All right. They work like Forex. If you didn't know how Forex works, Forex is different at every, like if you go to forex.com or you go to Oanda or wherever, they're different prices. Everybody talks about the, yen dollar spread or the euro dollar spread, the Canadian dollar spread. It's different at every broker. Right? They're usually pretty close, but it's different everywhere. So that's one thing to be aware of in the crypto space. If you're a noob in crypto, that the prices aren't the prices. Arbitrage, but you got to have big pockets to do arbitrage. And you got to be fast. So there are now bots that do that between most of the big exchanges. And just so you know, there's 763 exchanges out there right now. 763. Binance, the big dog here, the most trading volume. Coinbase, much smaller. Bybit, how many people in the US have heard of Bybit or Upbit? Those are both bigger exchanges. Gate.io. And you're like, hey, which crypto exchange is the best one? Look, none of them have all the coins. That's, number of coins supported. These numbers aren't very big compared to the 2.4 million cryptos that are out there. 2.4 million cryptos. So you're looking to get into crypto, be careful. All right. Make sure you understand what the fudge you're doing. So Bitcoin struggling to, it may pop 100,000. We'll see. We'll see what happens here. It's just a consolidation right here. I do expect us to make a rapid ascent, probably up into the 120,000 area, then consolidate again. All right, pop up into this 115, 120,000 area, consolidate for a little while, maybe do a retrace before we get on up to the target. Minimum target, 157,000. And we have this other fib line right here to 172, 173, 175, 170,000 area right up there. That's my ideal target. So this is like the conservative expectation. This is my just normal expectation. And then if we're getting really spicy, this 300,000 would be my aggressive targets. And we could go higher than that, but let's keep it in check here. Now, halving events, every halving event in the past, we've kind of hit this all but the last one. The one that happened in 2020, we came up shy. All the other ones, we hit the 2.272. So that could be a very real possibility if things get really spicy. We can go up there and hit that $460,000, $470,000 area. Not really my primary expectation. I think we stall out down here at this level. And why? You just have to go look at the big numbers. All right. The law of big numbers right here. As things climb this ladder here, we're seeing Bitcoin getting the number 7 spot at $1.9 trillion. As we climb to the top, it gets harder and harder to double It's going to be really hard for that to go to 4 trillion and pop up here to the number 2 spot. Really hard. Why? Because it takes $1.9 trillion of money out of the economy to do that. So if you've ever played around, yeah, thanks. Cool. I just crashed my browser loading this page. Awesome. There it goes. Play some ads. All right. So if you wonder why things like Nvidia and Apple quit moving so much once they get to the top, it's because there's so much money flowing in and out. It makes it hard to move. It's the law of big numbers. Once the numbers get big, it's hard. Think about it. You got $1. You can pretty much beg for somebody to give you $1 and you just doubled your money. You got $100 million. It's a lot of effort to get somebody to give you $100 million to double your money. Just, that's the law of big numbers. Alrighty. Ethereum really trying to break it higher here. We broke the downtrend. Let's go to the all-time history. This downtrend we had cooking here. We broke out right there. Did it. Game on. The upside targets right now, 4,500, 4,900. That puts us on a breakout that would take us up to 6,100, possibly 7,600. And it depends on if you're on the log scale or not. Like, I think Ethereum looks pretty good on the log scale, so 6,100, 7,600. Potential upside resistance points for the extension once we get broken out to new highs. We may consolidate a little bit before we do that. Dollar. That's interesting. So this is in the right place. Anybody's heard me talk about this before. This is in the right place with the right proportion to break down and do a bigger move down. This head and shoulders is a reversal pattern, and it needs to look a certain way to actually indicate a reversal that matches with Elliott wave. Now, at this point, the high may come up as high as $1.07 or 107.2. If we can get that and hold that 107.2, that's a very ideal place to turn down and make a bigger down in the dollar. Come up to there. And for those of you not familiar, the theory of this kind of goes that you make a shoulder, a head, and a shoulder, which is in this position, it's an Elliott wave pattern. For a reversal, that'd be a 4, 5, 1, 2, and a potential 3. Now, top of the head to the neckline, below the breakdown of the neckline. Oh, look, that puts it right to that target right there. That's kind of funny. Can't make this stuff up sometimes. This looks like it may be the operative pattern for... So the dollar may come up here, bang its head on that 618, retrace from the high to the low. This high right there. That low right there. That retrace of the 618. We come back down, break through the neckline. Right there. I love it when multiple patterns line up. How do you trade this? Different ways. USD is not the way, because that's a leveraged semiconductor ETF. So that is not the dollar right there. But you could trade it against other currency pairs like FXY. See, this is rising right now. As the dollar drops, maybe higher. And then FXE. FXG. Where's the... That's not the right one. FXB. So there's lots of different ones. Yeah, this probably climb as the dollar drops. Interesting, right? So those are ways to play without going to the Forex market. NKD indicating that we may get some upward pressure. Now we're just consolidating in a very tight range here. Very tight the last several days. If we can break up and out of this bigger orange box, go cruising on up to that 44,000. That'll probably take the world, you know, this is global liquidity kind of, that's what I'm using it as a measure of. If we can break up, probably take, you know, the rising tide floats all boats. If we break down, it's probably going to cause more panic in the US markets and we see another big flush. So it's something I'm keeping an eye on. I have a alert right there and an alert up here on either side of that box. All right. We were talking about Amazon and Walmart on Friday. Black Friday looks like it's being kind to Amazon. They're reporting giant online sales numbers. Walmart keeps benefiting from people trading down. And I go to the market and pull kind of everything moving up or down by $2 or more. I put the up on the gainers list and I put the down on the decliners list. So here's what we had. And this doesn't look all that super awesome now. Like these were up, all up more $2 or more in the pre-market. Now they're not. Now we're seeing a lot of giving it back here. And the decliners, they were down $2 or more, and some of them are reversing quickly. I'm just looking for opportunities here. Things to pay attention to today. ASML probably still on the path to a deeper flush out. Kind of expecting something down in the low 600s to bottom that one out. AGFY. I don't think I touched that with your money, but it's a dangerous pattern right there. This is very getting sold very hard right here. Has a reverse split right there, and then all of a sudden, hey, let's turn it. That's not the kind of thing that's very sustainable, you might say, as far as continuation higher. Usually this report results in a return right back to the lows. Reverse splits are my number one big red flag to stay away from a stock. MSTX, that was popping, now we're dropping. It's a leveraged MSTR play. Right there. As Bitcoin pulls back, this one will probably pull back. This could come back to the roadmap line. Like if you're not ready for that, be careful out there. Very well could come back down to the roadmap line. We've got upside resistance right here at the 460 area. We get above that, we can go cruising on up. 579, 600, 700, 900, 1,000. 1,000 is kind of my ideal target zone, but may or may not get there. So we'll see. We'll see where we get to. And that's cool. Can we just do... Trying to pop the chat back in, but chat did something funny there. There it goes. There we go. All right. My thoughts on XRP. Look at this. Why would XRP be... I don't usually take requests, but I just want to comment about this because I've had several people ask me. So XRP. What is the case for this being the crypto? Supply, there's only 57% of the supply. So you dump the rest of the supply, price gets cut in half. Why? What's the case for this to go to $10, $100, $1,000? What problem does it solve that Bitcoin and Ethereum don't already have covered, and Solana, and Avalanche, and FedNow is built on Avalanche. It's not doing much. Lots of stuff's on Solana right now. It's not doing much. Lots of altcoins on Ethereum, and it's been detrimental. Tell me how many places hold XRP on the balance sheet? Why would they? How many people, how many companies like MSTR are trading XRP? I think it's a hype coin. Honestly, I think it's just hype. I don't think it solves any fundamental problem in crypto. That, to me, it's kind of dangerous. You drop the Ripple lawsuit, but what does it do? Like, what magic thing does it do? What problem does it solve that everybody's going to suddenly start using Ripple? That's just kind of the way I look at it. I think there's better opportunities, and XRP, not one of them at this point for me. You can make your own decision. So, AMAT, that still looks like it has downside to go. BOIL. Dun, dun, dun. Dun, 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 dun. I think it's a hype coin on XRP. So I just, what magic thing does it solve? Tell me. Give me 5 things. Give me one big thing that everybody's going to use it. So it works for global transactions. So does Bitcoin. So does Ethereum. So does Solana. So does Avalanche. So does, like, that's not a unique thing. BOIL, ultra natural gas, just getting churned up here. Natural gas rejected off of the 618, 360, pulling back, and I do expect this to make one final pop into this $4 area, possibly a 420. Then probably make a bigger retrace back down in the 250 area. Something like that. Kind of what I expect on natural gas. SOS. I mean, do your own research, but it's kind of like, I've heard a lot. I had people ask me over the weekend about XRP. It's like, don't fall into the hype trap. Like, this is the same thing that happens every time Bitcoin goes on a run. It reminds me XRP kind of reminds me exactly of the Doge case in 2021. Like, everybody's like, Doge is going to $1 bajillion. It's going past $1. And anybody remember what happened? Dun, 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 dun. We stopped right there. Oh, that doesn't mean you couldn't have made, like, people made tons of money. People made tons of money here, and people who bought it back here made tons of money. But this is an inflationary coin too. Like, that's the problem. So there's no limit to the supply. This unlimited supply. Like, trillions of these are going to be in the market. Quadrillions. I don't know. Go back over here. Pop down to Doge. Doggy coin. The supply is infinity. And the supply on Ethereum is infinity too. That's a problem. When you don't have cap supply, it's a problem. And when most of the supply is not out there, or a large chunk of it is not out in the market, somebody can dump the rest of that supply. Oh, well, it's not supposed to hit the market. I mean, Bitcoin's already 94% in the market. The rest of it's not coming out for 150 years. We won't have the 100% supply for 150 years. Very defined. The rules of the game are not going to change. And SHIB down here, look at this ridiculousness. Infinite supply. Avalanche gives me caution too. 57% of the supply in the market. ADA, 77%. I'm very cautious on infinite supply coins. You know, to me, XRP's got as good a chance going 100 as Pepe's got going to a penny. You can make a lot more money on Pepe going to a penny than you would XRP going to $100. It's up to you. You know, play how you want. Boom, 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 boom. SOS. Nasty chart. Reverse split. Be careful. Big red flag. Reverse split over here. That's just dangerous. Don't trade it. That's not how I trade. It's not what I trade. So I'm looking for reliable things I can buy and hold for a while and make a bunch of money. UMAC is probably going to follow the bubble pattern right back down. Here's the bubble pattern. If you're unfamiliar with this, we get this optimism and hope and thrill and people sucking in, and then we get a sudden drop and some chop, consolidation. People are like, oh, it just needs to cool off. And then we break down, people start getting a little bit of anxiety, and we flush. And people get angry and depressed. Happens all the time. This is the way a market cycle works. It's the way a bubble works. It's the way humans work in the market. We see it on the charts all the time. So this one, likely to go that same path. DPST, likely to retrace back to the roadmap line. Urban. Man, look at that. Right to the target. Even when it's not really a bubble, look, we have that kind of exponential go, a little bit of chop, right back down. Doing it again, right back up. Probably find a top, consolidate, and come right back down. Nice. TEM, looking for the 85 target. That's not really much price action to do much with. SMLR, doing the same thing as MSTR now. This could pop off. Mora now doing the same thing as MSTR now too. So Mora jumping into the selling bonds and buying Bitcoin game. Heck, why mine if you can just mine investors and money? SNRE, not enough candles to do anything with. Hasbro has resistance right there. If we can get above it, that would be an indication we may go cruising up here to 75. This is more my pattern that I look for. And a more stable thing. It already has a uptrend cooking. We have started to chill out a little bit, but this is uptrend. Kind of arced off a little bit. Nice retrace into that. We can pop back up, get through the resistance, upside targets right there. INOD, just churning. LRCX, that's a downtrend. So even though it's popping resistance right here at this downtrend at the roadmap line, and that could result in a lower low. See that one right there? That was the low. We came up, we bounced off of it. Same pattern, upside down, and we made the extension down to the target right there. Now, expected to do it again. Same thing as that pattern, just upside down. MELI, stuff that was actually declining pre-markets. That looks like it wants to come down to the roadmap line. If not, get a lower low. And that would be an echo of this move down right there. APLT, continuing to flush. Not sure how that was 2 hours or more down, but hey. Some of these may have been, I don't know. Churn, SMCI. May get delisted. My cautionary tale, be careful. This could be delisted and you're just stuck holding whatever position. BRZU, continuing to churn. I don't think this loaded the new list. Let's see. Let's see. Yeah, that was a different list. There we go. PTCT. Yeah, this looks better. Better list. I don't think it was synced up. I think it was disconnected. Anyway. Oh, we've got PCTC. That is a therapeutics, biotech, pharmaceutical. Be careful there. Let's turn that off. But could come up to 70. Current move is kind of tapped out, so we may see a retrace before we can push on higher. NVCR. There's the high, there's the low, there's the resistance, and we're stuck in it. That gap down is resistance. That's more medical specialty stuff. Tesla. Ooh, nice. If we can break out higher, resistance up here at 407 and then 500 above that. This one coming across here at 380. So we've got those 3 highs right there. We may see some, we may struggle to get through those prior highs. $500 has been my long-term upside target that we may see a large correction reaction from. ISRG was popping, now it's dropping. This needs a revisit of the roadmap line. We haven't been down there since November of last year. Cold. Yeah, that was still on the list. We already talked about that. FSLR. Resistance at the roadmap line. Watch for this to turn down and make another extension lower. There was the bigger target. UMAC. Already talked about that one. Be careful. Probably coming to give it up eventually. TSM. Taiwan Semi. Probably coming back down to the roadmap line despite the intermediate pop today. Now, we hit the resistance and turned down. Came down a little deep. We've kind of retested the zone here where we've churned a little bit at this. You know, we gapped down, couldn't break through it, found resistance, popped up above it. Now we're back down to it, testing. If we can bounce off of that, next upside, 218, 223. Net might be on a path up here to the 127, 135 area. Marvell is at resistance. Watch for a pullback. They can hold the breakouts. We could go higher. That higher level is right up here, 115. Reddit keeps grinding at the high, 162 resistance, and we may take this back sometime. Back all the way back down in this zone where we see how we had that high, failed to break above, gapped up away from it. We may come back and retest that sometime out here next year. OKTA, UKTA, just churning. Not sure we're going anywhere. NBIS, not enough candles to do anything with. Nasty price action. GMed, medical specialty. I don't know, like one of the 4 things I don't like to trade. There's 4 things that commonly don't follow the patterns and makes it difficult to trade. One of those being pharmaceutical, medical, anything the Food and Drug Administration is involved in. So that's biotechs, you know, medical specialties, pharmaceuticals, that sort of stuff. FDA can just, hey, we don't think you should do business anymore, and then they get screwed. So that's a head and shoulders rejection. Tried to break lower, then shot back up, and may go up here. So the head and shoulders pattern is a, going down from the neckline, but the Head and Shoulders rejection goes up from the neckline. So that may go up here to 32 on MNSO. SNTI. That's another biotech with a reverse split in there. Reverse splits are just a caution, like a big red flag. See them a lot in biotech. And Toyota Motors, that looks like it needs a flush lower. Has not been able to come up to resistance. Consolidating low, and looks like it needs another flush before we can get the bottom established. Square hit that upside target. Like I said, 99 next upside target. ARQQ. Reverse splits. Big red flag. Probably going to do that eventually. A-Lab. Just churn. We don't always do the retraces. I'm a trend continuation pullback, trend pullback continuation trader. So I need something to trend. I need a pullback. Forms my setup. Usually it triggers an entry. And then we get continuation. That's what I'm looking for. I'm looking for this pattern to set up so I can get this high probability move over here. Because pullbacks happen in the market all the time. And this one doesn't have a pullback. So this keeps extending and extending and extending, and who knows where the end will be. Eventually that'll retrace and set up something. PPBT, reverse split. How do I know? They don't reverse split when they're shooting off like this. You don't usually get a reverse split. When they're coming down like this, down, 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 not above the roadmap line at all, reverse split. I stay away from those. TEM, that was on the list a second ago. Still upside 84. SOS, another reverse split. Be careful, that's garbage. Affirm, hey, at the target. Next potential up here, 135 to 200 area. Big, fat, wide potential. That puts it up here near this all-time high. Probably be some resistance at that all-time high. CRDO. Upside 56. So decliners, Boyle. That's ultra long natural gas. Natural gas pulling back. This is dropping. UPST. Probably going to come back to the roadmap line. RVMD. That's pharmaceutical, metal, specialty tech stuff. So probably going to come back to the roadmap. Excuse me. Roadmap line. And bonus trade for the day. I brought a bonus trade. Right there. KNG. This is not the best one. This has a nice uptrend going. Kind of topped it out here, retraced very quickly, popped up, couldn't set the entry, but then we got it right over here. KNG. And this has been kind of looking back a little bit further though. We've been kind of choppy, so caution here. That would be my first caution. Resistance and that 56 area. So we have target 55.94, stop below 51, $1.59 upside potential, 87% of the time, but we've only got 8 trades. Only 8 trades. So not a statistical population since 2018 right there. And nice banging, almost 4 profit factor with 87. Oops, drew over the 87. Not too shabby right there. Not looking for a giant move either inside the choppiness. Just a slight extension to up in the 59, whatever that was, 59, 55.94, 55.94. So my fibs are slightly off right there. All right. So that is a Dividend Aristocrats Target Income ETF. And probably looks banging on the, yeah. Look at that on an adjusted basis. That's just rocking and rolling higher. To be a dividend aristocrat, you've got to, there's like I said, dividend achiever is what I was thinking of. You got to have like 10 years of constantly paying dividends and increasing them every year. And that's essentially what you're looking at right here is high dividend stocks, or highly reliable dividend paying stocks. I should get my words out the right order. So what are they holding? Pop down here and look. Top 10 holdings, and not giant exposure to any one thing. And Goose was doing some research and found out that if you hold 40 to 60, 40 names, any one blowing out doesn't necessarily cause you much pain. And if you can get that on up to 60 names that you're holding. So if you wanted to just go to the underlyings, here you go. These are some strong dividend aristocrats, although this chart right there in particular has been an absolute garbage pile. There you go. Walmart, rocking and rolling. WW Grainger, T. Rowe, Fastenal. There you go. Quality dividend paying companies right there. Doesn't mean they won't be volatile. There you go. There's the kings. All right, bias for the day. Circling back, wrap it up. Still kind of expect that breakout. I'm getting close to the 21.4 now. On NQ. Zoom her up, Buttercup. Lots of lines. Just want to move some of this junk we've had on here. Clean it up. Clean it up, clean it up, clean it up. Talked about lots of stuff for the last couple months, but here we are. So close. 21.4. That completes the target on the upside. Right there. There's the zone. 21.4. Maybe even up to 22. Now, can we do that today? Well, that's what we're indicating. We may find some resistance as we get to that high from early November. Watch out for that pullback, but I kind of expect us to pop it on up there. Santa rally, baby. Let's see if we can get it. All right. Hope you all have a good day. I'll see you later. Go get into other things here. Welcome to December. Let's wrap it up in a strong manner. Thanks for coming. Thanks for watching. Make sure you give me a thumbs up if anything I said was helpful, beneficial. I'll see you tomorrow. Same bad time, same bad channel, 9:15 tomorrow morning.